What's up, family? This is your brother in the kingdom, Emmanuel Mata, and I'm talking about everything to do with prop trading and really to be a successful, profitable prop trader. I've been trading prop firms, I've failed a lot, I've passed a lot, and definitely I really get to identify which characteristics and which conditions that I have to meet to become a successful, profitable trader, and consistently in the long run, not just once or twice and I blow it the next time. So this is really going to help you to actually become a successful prop trader. So before you purchase any challenge, please do watch this video till the end. It is really going to help you, because as soon as I was able to identify this and visualize these things that I'm about to show you, I was able to become disciplined enough to consistently maintain a prop trading account. So the first one that we gotta talk about when it comes to be a successful trader that you have to identify and be disciplined with is actually the time frame, or the type of trader you are when it comes to time frames, right? There are three categories with this family. So there is day traders, swing traders, and position traders. So it's very much important that you can understand your identity when it comes to the markets. Don't just trade any time frames and just play around. You must have a routine when it comes to time frames, which puts you in a category, whether it's a day trader or a swing trader or a position trader. So now let me just break it down for them, right? When we're talking about a day trader, we're talking about a trader who trades from the 5 minutes all the way to the 60-minute, or rather what we call the 1 hour. These are traders that we call intraday traders that close trades within the same day they actually execute them. Then we have swing traders. This type of traders typically hold trades over a day or over a week. So they trade typically from the 4 hour all the way to the day one, or to the daily time frame. They spot their entries and setups there that can last up to the whole week. Then we have what we call position traders, or what we call investors in the market. These are typically traders that hold, or rather identify their trading time frames from the day one or daily to the monthly chart. So they trade like that, so they can hold their trades weeks, months, and even years. So you must really get to understand what type of trader are you, and keep up to that and make sure that is your standard of trading. You also can be in two categories, day trader and a swing trader. Myself, I swing trade them, but I cannot handle the emotional pressure that comes with checking up your trade every 8 hours or so. I am a day trader, so I'm used to closing trades within 30 minutes, 10 minutes, because I trade injection of volatility. So it goes down to whatever you're comfortable with throughout your experience of trading. If you do not know this, the best way is to actually backtest, forward test, and see what you're really comfortable with when it comes to time frames. And the second one that we want to talk about is risk management. This is very crucial in the sense that a lot of prop firms do put a lot of parameters to make sure that you actually, respect risk management. A lot of traders, that's where they fail, because they are used to trading brokers where you can go up to 50% drawdown, 60, 80, right? We have legends that have gone up to 90% drawdowns when it comes to brokers and still came back. So a lot of traders, especially when it comes to Africa, they trade a do or die, full margin lottery trading method. So we go full in, hoping and praying that we will come back. And when we get to trade prop firms, we see the large capitals and we think, oh my God, I can do the very same thing, and we end up failing so many challenges. So the best way to combat this is to understand really, in fact, what is your risk management? What is your risk tolerance when it comes to trading according to your prop firm? So most prop firms in a day, you can lose up to 5% or 4%. So you must really have your risk parameters lower than that to make sure that when you have a losing streak, you can really not break those rules. It's very much important that this can help you to maintain your account in the long run. Okay, risk management. So identify it, 1 or 2% in a trade, and you understand how many trades you take. So personally, I take 1 to 2 trades in a day. All right, typically, if it's a very good day, I get 2 trading opportunities. That means that even if I risk 2% and I lose 1 trade, I've lost 2% and I can make more, because that's my stop loss when it comes to trading. That I can lose 2%, but I can make more, like maybe 5% more or 6% more when it comes to the trade. So does not mean that you're gonna make 2% to lose 2%. Remember, this also goes down to your risk reward ratio. Are you willing to lose 1 to gain 3? So understand that it's really gonna make it very easy to govern yourself when it comes to trading, whether you become greedy, too excited, or really start to spiral out in losses. This is going to really handle and help you to make it within the prop space. So number 3 is to identify your market conditions. Which conditions do you get to trade in the markets? Very crucial, right? We have ranging markets, we have bullish markets and bearish markets. Identify if you are a trend trader or you are a ranging market breakout trader, whatever type of methodology that you use that works for you, whichever time frames and which trends you identify really helps you, because it helps you in the sense that when there's nothing on the markets, it does not move you. Basically, what was not your intention won't get your attention, because your intention is very clear on your plan as a trader that governs you so much that you won't end up losing prop trading accounts, because you know for sure what you're actually looking for in the markets. So conditions are very much important. And of course, number 4, we're talking about markets. It's very much crucial that you can understand which markets you trade. So we have options, we have equities, we have futures, we have forex. These are all types of markets that are available to all traders. So as a trader, understand which markets you get to trade. I personally trade NASDAQ, so I trade indexes, NASDAQ and DAX. So I play around that, but mostly I trade DAX. I trade NASDAQ, and then of course DAX. That's my second option. And with that, it has really made it easy for me to spot entries, to get profits, because I get used to the movement and behavior and characteristics that NASDAQ has in the long run, which makes it easy for me to spot entries without putting a lot of effort, which really increases my win rate, because it's very easy for me to just go in and say I'm selling, because I know for sure this is what it does within these sessions. This is what it does. I'm able to spot the consistency that's able to be easy for me to extract profits from the market. Do this for yourself and you'll thank yourself later. Go in and search which ones you find yourself well acquainted with, which ones favors you the most, which one appears to be very easy the most, and you press on that, and you will definitely become a very successful trader, not just prop trading. In fact, most prop firms have actually come across a lot of successful accounts, past accounts, and they do realize most of these accounts are coming from specialists, trade specialists. We have the pound, we have the NASDAQ, we have Euro, USD specialists. A lot of them that succeed, they are pressing on one pair, because it's very easy to actually do that. Number 5, family, what we want to talk about is entries, right? Which type of entries do you normally go for in the markets? And this goes again in hand with your trading methodology, your trading strategy. Which kind of technical or fundamental catalyst do you actually get to use in order to get your trades? Very much important that you really know exactly which strategy. It will define your type of entries. Most of us as ITC or rather ICT and rather smart money traders, we trade fair value gaps, order blocks, order breakers. These are stuff that are well known out there that many of us use as our entry formats. If you are another trader, maybe trendline trader, the dead touch, really get to understand and define it. In fact, if you really want to know how good your entry formats are, it's either you back test them and also forward test them. You document it, save up those archives, and it will really increase the level of confidence in your entries, so that you can actually put them in your plan that governs you. So as I repeat again, if there's no such an entry, nothing in the market will get your attention because everything has already been intended already. So this saves you a lot of headache in going in the market and really having no direction, like a headless chicken, right? Because you know what you want. So many of us jump in the market with so much speed but without direction. So it's better to have direction and lower speed because you are still going in the right direction. Okay, so your entries are very crucial. Put them down, and this is what you're gonna stick to. And of course, family, we have number 6. So number 6 is basically stops, or your stop losses. When it gets to trading stop losses, it's very much important that you get to understand this based on your trading methodology. What do I mean by that? A lot of us, when it comes to smart money, right? Most of our stops, especially as an intraday trader, as a scalper, I'll get like 15 pips away, 20 pips away from my actual entry. So you must actually get to understand with your stop loss, how will it align with your risk management. So it's very much important that you can really create a range based on consistency. All of the stuff, family, that I'm saying, if you're not a trader who has tested himself and the way they trade, and you do not understand, it's very much useless that you actually try to do this. Otherwise, you need to start at the first step, which is going ahead. Let's say you take 100 trades. This will help you take 100 trades based on the method or different methods that you've been taught, that you have acquired either on YouTube or from different mentors or classes or books. Test them out, which one is comfortable for you. Once you have done that, the one that you choose, make sure you press on it to really refine it and make it clear, absolutely clear to you, to say how does it trade, stop losses, ranges and everything. So then everything that I have now spoke about will make sense, and you'll be able to actually put it into plan and into paper. So stop losses are very much important as a trader who is a professional trader who's about to go into the space of prop trading. Putting the right stop losses that you usually put will really create a good pattern for you, that you know that if I'm gonna get stopped out at 30 pips and I've risked 1 or 2%, I know for sure this is how much I'm gonna lose on a 100k or 200k account. It makes it clear, and you're not moved by when you have losing trades, because you know exactly what you're willing to lose. Understand it, right? And of course, this comes to take profits or targets, which is number 7. So understand, what is your targets? How do you place your targets? Do you place it in terms of a fixed rate where you say, I am only trading 1:5, 1:7, or 1:1, or 1:2? I do know traders that actually absolutely trade like that. They only trade 1:1, and that's what they take. It either hits their SL or goes into their take profit. And the other traders that even go up to 1:10, and they'll either use another method that I solely use, which is actually called trail stopping. So once I've hit, let's say, multiple take profits, I'll go ahead and take off a percentage or protect my profits, or what we call lock my profits. So that means, let's say I do have a target of about, let's say, $200 per day, but then I have targets that will give me more than that. But once I hit the target, I know I can now trail stop most of my trades to just go on freely without having no risk to come back and stop me out. This has helped me tremendously because it establishes a root of discipline within my trading journey. I just hope, family, that you've really got to grasp all of this, that you're writing notes. I want to go over them again, family. So I do have notes here. So the first one, again, you need to identify the time frames. Second, you need to identify the risk management. Third, you need to identify which conditions you trade. Fourth, you need to identify which markets you trade. 5, you need to identify the entry formats that you use regularly and consistently. And of course, 6, you need to identify how far do you put your stop loss from your structure, from your entry. Understand that, or percentage of loss that you're willing to take in a day. 7, understand your targets. Are you using trail stops? Are you using 1:3? Are you using multiple take profits, different lot sizes, or taking off partial profits as you're trading along or as it goes into profit? It's very much important that you actually do this. This is what we call typically a trading plan. A trading plan is a guideline that will help you towards your trading as a trader, or to become a really good disciplined trader. You can basically call it the Bible, or rather the law book of your trading. Some of us, we actually go to a point of printing it out and have it in our office. As we trade, we actually look at it and say, wow, this is my trading plan. Before I trade, do I have the conditions that actually tick this list? So it's very much important that you have actually taken value from this, and let me know what you think about this. This is really going to help you so much to pass your challenges, and as well, please give me testimonies once you've passed your challenges. Anyway, this is the end of the video. God bless you. Make sure you subscribe to this channel. We do have more videos for you.